And today I brought to you about investing in a property. A lot of folks would come around and know that, okay, I buy a property, I know I'm going to have some deduction, but what exactly that is, how much is it helping me? So I consulted with a client of ours, and his name is John. He would be a perfect example that for us to go through today on here. And I, of course, would not use specific informations, but John had saved $260,000 taxes in year 2023. Let's get going with what I have here for you. Before we start, let me share my screen. This is the buying investment property, save 260K taxes for John. We're going to get there. I'll help you to calculate. But first of all, let me introduce our firm to you. We have 27 years and plus practice history, and we have team members speaking collectively 10 different languages. And of course, we have a lot of clients. And right now, we're establishing our number 5 branch at Houston, Texas. And I served on national taxpayer advocacy panel for 3 years. This is a federal advisory committee to provide advices to IRS. And I also want to show you our partners, which is online. If you go to communitycpa.com and go to appointment button, then you will see these partners. And for any specific information or knowledge that you want to acquire, you can tap into these partners and have them help you. And the no responsibility disclaimer is sort of things that, formality we need to follow and remind you. Every time you take our advice and you use the calculation I use, you know that you better double check, triple check, and verify with professionals and attorneys to make sure that you are doing it right. This knowledge is free of charge, and we just want people to be educated so you know how to exercise your muscles in tax world and always save taxes and do better and for your business, right? All right, John's story. So John, in 2023, John made $2 million on W-2. He doesn't always make 2 million, but 2023 is 1 year that he exercised his stock option. So he got a lot of payout. So made him $2 million W-2. You can imagine that's a lot of money. Of course, a lot of money has already been withheld. So he's kind of paid in about $800,000 taxes already. So now, and he normally would get just 500,000 in W-2. So looks like 2023 is a special year for him, right? So he has one rental property, a small one, making $6,000 rental income, and with expenses going with it, he actually have a loss every year. But because his income is so high, so all the losses he has inside of that Schedule E is being eliminated. So he could not get any benefit out of the losses. So he has a whole bunch of losses sitting in the back end in his 1040. Then John also bought in 2023, and he met us earlier. So back in April or March, and he bought a $2 million property, which he uses for for rental. He uses for rental. And this property is actually large enough that can host company gatherings and a special event, can host wedding venues and things like that. So it's a property, and that with probably around 8 separate master bedrooms per se. So it is a property that he is going to use that for the event rental. And he came in November, which we always make our client coming back to us before the year end, because we want to see how exactly they're doing overall in the year. So he came in November, and we at that time recommended the following things to him. We recommended him to set up an S corporation. We recommended him to have a holding company, which is a partnership 1065 with him and his wife. So now let me just come through here, because we only have 30 minutes. So I want to go through this really fast. And my last slides in here, before I jump onto the whiteboard is this. So you know that you can email Catherine at communitycpa.com to reach out to see what webinar you like to listen. At the same time, we are the CPA firm. Ever since we started 27 years ago, we always open 6 days a week. So we actually working regularly for Saturday for our busy entrepreneurs. I know who you are. And when you are busy, there is no time during the weekday. Saturday might be the only time you have. You can get hold of us if that's the case. All right. Now I'm going to stop sharing and I'm coming to you again. And this time I'm going to share with you a whiteboard. All right. The reason I have this whiteboard here, because this whiteboard is going to help us to understand the plan we did and calculate the taxes that John is going to pay for 2023. So I will start by drawing the structure. And when I say structure in the tax world, it means entities, right? So in this particular case, for John, I have three structures here. The reason why I have three, you remember? That's because I had a holding company and I also had a S corp, right? And I also have 1040. That's John's 1040. And this is the holding company, holding real estate and renting real estate, holding company. And this is a partnership. And this one is S corp, as you know. So we file 1120S, right? So this one filed 1065. And we have 1040 W2. Remember, John was making this money. Remember, he had so much taxes that he needs to pay. So the taxes withholding is 800,000. So that's what's his taxes right now. Without us doing anything, John gonna come over to us and give us the W-2. We file their taxes. He probably gonna owe about $800,000 income tax. So that's the end of the day for 2023. However, John did something different. First of all, and he bought a building, right? You remember this building is $2 million? All right. So right here, we're going to start to knocking into the building. And because we know about this building, so this building has three parts. And the first part is the land. The land based on the assessor's website, and we know that land is $600,000. Then we also know the building. Sorry, the land is actually 300,000. Let me change that number. So you may ask me, oh, where did you get that 300,000? When you buy properties, and you will be able to find the property breakdown between the land and between land and the building on the county assessor's website. So it will tell you, but in this case, the land price on the assessor's website is actually only about 100,000. We raised it to 300 just because the ratio compared to the original price to this 2 million, the land should be estimated to be about 300,000. So we got the land. Then we also have what we call the building structure. Building structures are things like the basement and the concrete walls and things that really do last for a long time. And they will last for 39 years according to IRS. So that building structure is valued at 1 million. So we left with the last part, that's building component. So what are these? Building component are your appliances, your painting, your flooring, and the things that, or your windows and things that it doesn't last for 39 years. So this would average about 15 years. Now, so with $2 million, so we know the component piece is 700,000, right? So we're in year 2023 filing taxes. So I just want to draw your attention here, and we can use bonus depreciation about 80% of 700,000. So what would that be? If I have 80%, 700,000, that give me 560K. Am I right? That is the expense. That is the expense over here. And remember, John also have another little house with an income. So that one is a 6,000. And assume that he got minimal income, and we just make it easy. We make this whole income on 1065, it is 10,000. And then now we have expenses coming from bonus depreciation. That is a 560K. And what about the building 1 million? That's 39. So that would give us a what? $1 million divided 39. And you tell me what that is. Let me do a calculation. Do you know that accountants are normally very bad with math? They're only like good with the theories. That is what that is. So it's 25K. 25K. So what do I get now? I got 585, right? Oh, I don't want to forget my 10,000 income. So my actually losses is 575. That's fine. So I got that. So this particular losses, because I formed a partnership, so it is giving me a K1, coming into my 1040. So my K1 is right here, and I'm actively involved in this partnership. I'll tell you why. Because in John's household, John is the only one making money, and the wife is just causing trouble for him, and so she doesn't really work. And now we're going to put him to work. So she is the one that going to manage these whole properties. But this partnership gave us a loss, right? Give us a 575K losses right here. Now let's talk about S Corp. Why do I have S Corp? I am forming this one for the wife. Because remember, she doesn't do work, and she just didn't really have any income. And you know that if you don't work, you don't have W-2, you also don't have Social Security benefit. You are so reliant on your husband is not a good idea. So I would always secretively advocate for the wives, for the stay-home mom and dad. So you stay home, you actually have a lot of value. So what I was telling John is that we're going to set up an S corporation, and she will be your administrator. She'll be your manager for your property. She will just manage your properties. Okay. Then in this case, in 2023, and she did some work, obviously when they go searching for properties and buying it, all these, and she did some work. So we plan and to pay wife, we want to pay her 160,000 a year. And you'll be like, whoa, John is really nice, paying so much money to the wife. Is that really offer any benefit? Huge benefit. Let me explain to you. So because we are paying salaries, and because there's no income for this year, because obviously we are running loss over here, so there's no income for the wife, but the work is done, so she actually do get paid. Then what we do is we will have her and do 401k. We set up 401k. I got my pen changed. Okay, we got her 401k set up. Oh. All right, 401k set up, and she's young, so we're gonna reduce. Oh, my pen. All right, so 23,000. Let me switch it back. Sorry, switch it back. And come on, why do I not have my proper pen out? Okay, this time maybe okay. So we set up a 401k for her. We set up a 401k solo for her. So she will be the only employee, and she'll have the 401k plan. So that plan will allow her to put in the deferrals, right? The payroll deferral is 24,000. So she can put in 24,000 out of the W-2, and the company can give match. You know how much match company can do? 25% of 160K. So what was that? That's a 40,000. So the company expenses, ladies and gentlemen, you know what a company expenses is? So the company expenses is actually 160K that was paid to her plus the 40K that matched. So it is 200K. So this S corporation gonna run a loss 200K because we made salary for the wife. And now what happens? W2, the wives need to be added in, right? But what is her W2? Her W2 is not 160K. It's actually 160K minus 24K. So because that 24 was deferred out, remember? So her real salary, taxable income is 163,000. But what is the K1 from S Corp? This K1 coming over. And 200K, am I right? That's the loss. So what am doing here is I want to show you. So I have a 2 million and I have 2 million income plus 136K for the wife minus 200K for S corporation loss minus 575K for the LLC loss. So what I got here is 1341. Am I right? Taxable income. So saved from taxable income over here to here. So what is my tax saving? To be exact, it's about $259,600. So what is happening to John right now? So he filed his taxes. He does his business tax return. This is due on March 15 this week, next week. This one is due March 15, and this one is due April 15. After April 15, he filed his tax return. He will receive, if this is the tax that he already paid via the W-2, actually the employer will already withhold a lot of money out of his W-2. So if this dollar is already paid, that means that he will receive a $259,000 refund from IRS. So this is where we are talking about when you have an investment property, there is a big thing happening in this whole accounting, right? You want to do it right and you want to know how to do it. This portion I was giving you, oops, what did I do? Okay, this portion I was giving you, this is called cost segregation. Cost segregation can be done by third party, and they can come in to give you this breakdown. And your CPA can also help to facilitate that. And then you also need to have these things set up, the two entities set up, then have your 401k set up. 401k setup has a due date. Let's say you want to give wife 401k for 2023. You really need to get that established before November because some of those financial institutions, they need time to set up contribution that you made for 2023, right? So you can see you made 64 total contribution, 24,000 out of your wife's W-2, 40,000, that is the company match and it become company expense. So this is just a really, I would say nothing sophisticated, folks. It just understand how the number runs on your tax return. And all of a sudden, and John was able to save this dollar amount. So I hope that's kind of give you a glimpse of what saving it is all about when you invest in property. But of course, when you invest in property, the land value and the building value is critical. Some of those cost segregation companies, they just say that they don't know how to do that. They just want you to give them the breakdown. I think the best place to know the breakdown properly, it is the valuation of the property. You have the land valuation done by the appraiser, then you have the appraiser evaluate the building, then you use these third-party valuations plus your cost segregation study, you can't go wrong. And of course, 2023 is 80% on bonus depreciation. But for 2024, it becomes 60%. But 2023, 2024 is also election years. So we'll see what tax changes when the new president or existing president got more time to look at the tax reforms, right? So tax is the thing that come with the presidents and depends on who is in the White House. But we want to focus on 2023 year right now. And the 2024 things are already rolling out. We know it's going to be 60%. That means it's only 420,000 expenses can come out, 420K, and not 560K in 2024. But still, there are other things that you can do related to these type of planning, as long as you plan ahead of time, as long as you know where community CPA is, and we can help you. So I hope you enjoy the whiteboard. Now let me show you our website so you know where to really find us. Now I'm going to go into a share screen, but this time I would share the screen related to, I found that on internet. So here, I come into Community CPA YouTube channel. This is our YouTube channel. You can subscribe to our channel. We have all kind of videos here. We have over 1,000 videos. And if you just type into the subject you want to know, and then you will search the videos out. And with that said, this is our website, and you can always come to our website and see how we have this onboarding with us channel. And this is the one that if you click this one, you can start silently onboarding yourself, because once you upload your information, like your driver license, everything, we knew you want to be our client. If you're a busy person, don't even have time to call us, you want us to just get your information so we can reach out to you, people use that to onboard with us. And you can also go to appointment button and see how we are, how our timesheet is. So what kind of time do we have? For example, if you come to me, and you will have the available time for you, and marked. If I'm just booked, then there's no time. Otherwise, you see, you have time available from me, and you can book my time. All right. So this is our 30 minutes, and I hope you got something from here. And I look forward to work with you. And when you come to us, if you know you're coming from internet, you're coming from our YouTube channel, just let us know. We're so delighted, and the folks are, studying our videos and know what we know and come to join us. Thank you for following us. Bye-bye.